A very good morning to all our viewers. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma, and with me, as always, is Cheryl D'Souza. And viewers, this is the show where you get all your stock-related queries answered by the experts. So do get ready for that. But before coming to that, let's have a look at what the markets are up to. So Cheryl, finally a respite coming in for all the bulls out there. But nevertheless, once again, we have cooled off from the day's highest point.
Absolutely, Shrishti, a very good morning to you. But nothing to be too perturbed about given the way how the markets have been panning out over the past few trading sessions. No doubt we are off the day's highest point. We started on a very firm footing, so to say. For now, if you see, Nifty is actually moved below the 17,200 mark, which we actually scaled past. At open right now, 0.4% uptick coming in for Nifty, ditto coming in for Sensex as well. Nifty Bank is also moving in tandem with the benchmark indices. But what's key to note is the fact that the market favor still in the market breadth is still in the favor of the advances. So on back of that, we can actually take some sort of a solace or respite in. But talking about the list of gainers in today's trading session, you have Asian Paints that's topping the charts, 3% uptick coming in for Asian Paints. L&T is seeing an uptick of about 2.6%. Tata Steel, Hindalco also actually bucking the trend. BPCL as well is holding on to good gains of about 1.7%. So these are the top 5 Nifty gainers as we speak. We're talking about the losing end. You have HUL that is declining about 1.6%. Bharti Airtel is down 1.5%. Remember, the Jio is coming out with competitive pricing when it comes to its postpaid plans. So that is having an impact on Bharti Airtel for sure. 1.5% downtick. 1% downtick coming for Britannia as well as SBI Life, and Reliance Industries is down about 0.5% in today's trading session. Talking about the list of sectoral indices and what the sectoral indices are doing at this point in time, it will be very safe to say is the fact that the metal index is actually performing well in today's trading session. So you have metal index as the top sectoral performer, 1.5% uptick coming in for the metal index, followed by pharma index as well, seeing good strength. It's the broader markets that's outperforming the benchmark indices. Small cap index is trading with gains of approximately 1% as we speak. Mid cap index is trading higher by about 0.7%. And on losing end is the FMCG index that is seeing some sort of pressure in today's trading session. But let's not forget, over the past few trading sessions, the markets have been immensely volatile, Shrishti, and it's been pretty difficult to pick out those safe havens in this market, isn't it?
Well, yes, absolutely, Cheryl. And we should not forget that whenever the markets are in a fall or they are in the downward trend, we actually tend to have good opportunities to enter for the long term. And not just that, on the technical parameters, there are opportunities to enter on technical basis as well. So onto the Buy Now, Sell Now lens today, we're going to be telling all our viewers the top picks and the top recommendations from sector and stock specific recommendations coming in from our experts. And for that, onto the show, we are being joined by Saurabh Jain, who is the Assistant Vice President at SMC Global, as well as we are being joined by Kunal Bothra. As always, a very good morning to both of you gentlemen. Kunal, firstly, let me come to you. You shared all your views regarding the market, but given the volatility in the markets, like yesterday that we spoke with you and you were like, from all sells, you're now turned into all buy recommendations. So at this point in time, given the volatility in the market, what will be your top recommendations, and which side of the market, or which would you be going with more buy trades from here on?
Absolutely, Srishti. So good morning to you, Cheryl, as well as to Saurabh. So my sense is that we are now getting into a process of a bounce for the index. Of course, it's going to be very, very difficult to try and ride or navigate through this bounce because of the way the market structure has been over the last 3-4 days. So there are bound to be a lot of intraday volatility on the indices, but I believe net that we should be on course over the next 3 to 4 days for a decent bounce on the index. Now in that aspect, yes, I did change my stance yesterday from an all sell to buy list. So 2 buy calls I would suggest, and I think it always makes sense to have a stock specific approach and give more impetus towards the stocks which have been more resilient in the last many days as well as many weeks of this market correction. So 2 buy calls in that regards. The first one is about Glenmark Pharma. Now if you look at the charts, there is something which is quite dramatic, which has happened to the stock price over the last 2-3 months. A lot of resilience for the stock, very good recovery from the sub 400 levels. I believe that that's a strong indication that Glenmark Pharma is recovered and is performing quite well as compared to the large cap pharma names which are still underperforming. So this is a sign of strength and resilience. Would suggest a buy with 460 could be an immediate target, stop loss at 415. And the second would be buy in Voltas, again a very, very classical stock. Uh, I think just last week or maybe a couple of weeks back, the stock had broken past about 200 moving average. In this last 3-4 days, the stock had slipped back again below the 200 DMA. But I believe that it's not broken the trend for Voltas. It's still into a consolidation at the higher end of the price ranges. So I believe that that's a very good sign to try and buy the stock. Would suggest a target of 940 on Voltas. Stop loss for traders who are looking at a current entry point should be kept at 844.
All right, so those are the topics coming in from Kunal this morning. A very good morning to you, Kunal, as well as a very good morning to you, Saurabh. And before I come to you, Saurabh, a quick note for all of our viewers who are tuned in and watching us live right now. Today, we are facing some issues with our YouTube feed, so we will not be able to take your queries if you've posted on YouTube or you're looking to post it on YouTube because the feed is unavailable today. However, we are live on our Twitter feed as well as on Facebook, as well as you can write to us on the WhatsApp number that will be flashing on the top of your screen very shortly. So do write in to us on those platforms, as well as we are also live on our website as well, that is etnownews.com. So you can also tune in and watch us there as well. So that's just a note for all of our viewers. But Saurabh, very good morning to you. And it's been a while actually that we've seen you on Buy in Sell now. But talking about it's been a while that we've actually also seen the markets behave in a very stable manner. We've only seen volatility since the start of the year 2023, and the last few weeks have been very difficult to actually pinpoint which direction the market will move. In such a scenario, where do you think one should bet? Which sectors are the ones that do you think that the viewers or investors to look to bet on for the longer term to make sure that the wealth is protected, especially in this time of volatility?
Hi, good morning, Cheryl, Srishti, and Kunal. See, this year making money would be quite tough because the cost of money is expected to be dearer in 2023. Inflation is still a problem which is still not sorted out globally in US and be it in India. If US Federal Reserve is likely to raise interest rates, and I think RBI will follow the suit. So some of the pockets and the sectors that are looking good for 2023, and there are very few opportunities. The first sector which we like is capital goods sector. The theme is that the government is going to spend hugely on the infrastructure side. Capacity utilization at the industry level is close to 70%, and many of the industries are choosing to spend more money on the expansion of their businesses. So some of the themes that are looking good in the capital goods sides is like Larsen Toubro, Cummins, Siemens, company like Triveni Turbine. The other pocket which we like is the credit growth is expected to be good, but it is better to stick with the private sector banks. The balance sheets are quite healthier, and the credit growth is above industry average. Few of the companies which we like are ICICI Bank, Kotak Mahindra, and Axis. Third sector which we like is hotel industry. It is expected to do phenomenally well in 2023 after posting good set of numbers in 2022. Bigger companies like Indian Hotel, Lemon Trees are going on the asset light model and adding more number of hotels in their portfolio. For example, Indian Hotel added approximately 30 hotels in the first 9 months of this fiscal. Lemon Tree is posting up a similar show. The capacity utilization rate is expected to improve. Average room rent is also expected to go up, which would directly give fillip to the margins and the bottom line. So the two thoughts that comes to the minds are Indian Hotels and Lemon Tree. The other sector which is looking good because of the weather conditions that have been forecasted are there would be a harsh weather conditions and possibility of the drought like conditions. So the other sector which is looking good is the utilities. If you look at the utilities, the energy consumption is going up even month on month in the month of February and year on year. It is expected to shoot up this summer season also. So clear beneficiaries will be companies like Power Grid, NTPC, NHPC, SJVN. So these are some of the thoughts which can be played well in 2023.
Those are the top recommendations in this market volatility coming in from our experts, where in stock-specific ideas, do have a look at Voltas as well as Glenmark. Those are the picks coming in from Kunal and Saurabh at this point in time, like sectors like capital goods, utilities, as well as private banks and hotel space as well. But with this, viewers, it's time to slip into a short break, but don't go anywhere. As we come right back, it's the time to take all your stock-related queries, so stay tuned.
Welcome back. You're watching BNSN on ET Now, a show where we get you answers for all of your stock-related queries. Today, viewers, we are facing some difficulties in the YouTube channel feed, so we are not live on YouTube. However, we are live on Twitter as well as Facebook. You can log into those portals and actually write into us, or you can write to us on our WhatsApp number that's flashing on the top of your screen. Do remember, mention your name, also the stock that you're looking to invest in. If you've already invested, mention the time horizon that you're looking to hold the stock, the buy price as well as the quantity. With that way, our experts will be able to help you better. With that, let me kickstart with taking your queries. And the first one that I've got from the Twitter page is from Mayank, and he's saying he's holding about 200 shares of Foseco India at a price of around 2,200 rupees per share. He wants to know whether it makes sense to add some more of these shares for the next 2 years. Saurabh, by any chance, do you track this one for Seco India?
Sorry, certainly not in coverage.
Kunal, have you seen the charts?
Yeah, I just saw the charts while you were asking the question. And I think it's an okay chart, done pretty well over the last, I think, 3-6 months, trading at a fresh live high as well as 52-week high at current levels of 2,400 plus. So you can continue to hold on. I would not suggest an averaging out at current levels because of the recent rally the stock has seen. But yeah, you can continue to hold on your existing quantity.
Okay, moving on, and sort of coming to you for the next one. Subramaniam is holding 190 shares of Firstsource Solutions at an average price of 114. That's exactly the current market price. Is that a hold or sell at this point in time, given the outlook of the IT sector and this particular company?
If you look at the overall IT sector, I think the outlook is getting dim and dim. Firstly, because of the higher interest rate and the cutting down on the budgets by the major companies, and now the liquidity choke which is happening in the banking sector in the US. Basically, Indian IT companies get 30%, 30 to 35% revenues from the BFSI, and if BFSI vertical is shrinking their balance sheet, trying to protect their margins, I think getting business from those companies would be much difficult. And moreover, Indian mid-cap IT companies may have business with the mid-sized companies over there, which may have actually a good amount of bearing on their revenues and profitability. So, in my sense, I think it is better to book profits, or get a exit at your buy price and shift money to the sectors that we just spoke at the start of the interview.
Right, this next one is coming from Sachin, and yes, Sachin, we have not been able to answer your queries, but today I'm taking it, and it is on RBL Bank as well as Bandhan Bank. Kunal, he's holding 100 shares of RBL Bank at a price of 176 rupees per share. Bandhan Bank at the rate of 50 shares at the rate of 242 rupees per share. He wants to know whether he can hold on to these counters for the next 6 months.
You can hold on to it, but I would not suggest an averaging out because I still believe that there could be more downtrend, at least over the near term, into these names. Specifically, I think RBL Bank, I would believe, could probably come back towards say 140ish or slightly below that, and Bandhan Bank can probably come back towards sub 200 levels over the very near term. So I think I would suggest to just hold on and not to average out at current levels.
Okay, moving on, and the next question is from Satya Veni, and Saurabh, he wants to get into Bharat Bijli. Would you recommend this particular counter for a fresh buy, and at what price, if the answer is yes?
If you look at the financials, I think it is the company has a kind of a stable business. Not much growth has been visible in the last many quarters. So I think if you are putting bet in the capital goods side, I think the leaders would make sense. For example, the companies like Larsen Toubro, Thermex, Cummins, Siemens, and there are a lot host of opportunities. I think better to bet on these counters.
Okay, this next one that I have is coming in from Pratiksha, and Pratiksha, I believe, is asking about TTK Prestige. Oh, sorry, this one is from Sukesh. He's writing to us from Kochi. He has 100 shares of TTK Prestige at a price of 780 rupees per share. Now he's on a loss. Kunal, not Kunal, Saurabh, he wants to know the long-term fundamentals, if that one is intact for TTK Prestige.
I think the kind of growth, the volume growth and the business growth we saw in the COVID era is the days are not coming back to the fore. I mean, the companies are not very gung-ho about the future volume growth, and even the pricing pressure is also there, which may have may have negated because of the downward prices revision in the commodity prices. But overall, I think the growth is not visible and the valuations are high, so the things are not working well in terms of investing in the company. So in my sense, it is better to avoid.
Okay, moving on, and Kunal, you have been tracking this counter and talking about BHEL, BHEL. Venkat Rao is looking for a fresh investment in this particular counter. At this point in time, would you advise for it, and what price he should enter?
Yeah, you can enter at current levels. The stock seems to be getting into an upward trend back again. 75 approximately is where the stock is trading right now. So I would suggest that maybe closer to 85, 90 could be an immediate target for BHL if you're even if you're looking at it as a 6 months to 9 month kind of a time horizon trade.
Yes, Pratiksha, you guessed it right. I am taking your query next. That is, this one is from Pratisha. She's writing to us from Oman. And she wants to know about Sterling and Wilson Kunal. 50 shares purchased at 400 rupees per share. She wants to know whether she can hold on to it for the next 6 months and also look to average it right now. Does it make sense? And support and resistance levels for this one.
Yeah, it makes sense to buy. I think if I'm not wrong, just last week or so, the stock had seen some good momentum above its 200 DMA from 300 approximately. The stock jumped up to 335, 340 levels, and now it's corrected back again. And even this phase of correction, it's not yet retested the 300 level. So that's a sign of strength. The charts are quite attractive. The weekly, monthly charts, and as well as the indicators are showing signs of a possible start of a fresh trend. So I think it's a good sign that you should be staying invested. If you've not bought, then I think it's a good level to buy the stock at current levels.
Okay, that's actually interesting today to see that many of our viewers are seeking an advice on fresh investment. And in that order, the next question that I have is from Guru. And Saurabh is looking for a fresh investment on Godrej Agrovet. At the current market price, would you advise for that?
It is better to avoid the companies at Godrej Agrovet. If you see the numbers are not pointing any kind of a good growth, and even the management has not given any kind of confidence. It is better to stick with the if you want to go with the in the FMCG sector, it is better to go with the companies like Dabur or maybe Tata Consumer, which has corrected a bit. I think this can be of good value to you.
All right, the next one is coming from Anjali, and Anjali is a senior citizen and she has 1,000 shares of Trident at the price of 37 rupees per share, and Piramal Enterprises 150 shares at a price of 857 rupees per share. Kunal, she wants to know what should she do with both of these counters, continue to hold on to it, look to exit, or average?
I think you should hold on to both of these stocks now. Trident on one hand looks attractive on a long-term time scale, so I would believe that possibly the stock should come back to your cost price at least over the very near term. Piramal Enterprise may not be a great chart on a longer term basis, but I believe that because of the last 1 month of very sharp selling, there could be a chance that you may see a relief rally into Piramal Enterprise. So if you're looking at a better exit point, then maybe closer to 720, 750 could be a zone where you may look to exit. So I would suggest to hold on both of them, but the approach would be completely different.
Okay, Kunal, the next question is specifically for you. Vivek is having a 30% loss in Mastech, and he wants to know what to do next. He can still hold this counter for the next 1 to 2 years. What will be your advice?
Well, I think you can continue to hold on, even though the stock is going through a bit of a corrective phase. I think if I'm not wrong, which means you've bought at the much higher end of the price ranges for Mastech as well as these IT stocks. I think it's a good time where you should look to start averaging, because if you're in from long-term play, then I believe that these IT stocks which are at the peak of negative news flow as well as negative price trends, I think forms a very good contrarian opportunity where you should look to invest into these stocks. So I would suggest a hold on Mastech, and if possible, you have additional capital, then I think you should probably even look to average.
Okay, this one is from Naga and he's holding 500 shares of PVR at a price of around 1,658 rupees per share. Wants to know whether it makes sense to continue to hold or exit. Saurabh, I'll take this query to you. PVR, what's your take on this one? Do you think this one will give you good returns, a blockbuster hit? Will it be in the longer term?
I guess so. I mean, the consolidation benefits will accrue to the company, and also the company is planning to add on 200 screens per year, and the kind of footfall we are witnessing. I mean, the people are going cinema to the cinemas, and the few blockbusters we have already seen. I think it is a good company to invest in.
Okay, a good company to invest in when it comes to PVR. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now, and let's continue taking all your stock related queries and the answers from our experts. And the next question that I have is coming from Samrat, and Saurabh, he's fortunate enough to have profits in Jay Prakash Ventures. He bought 24,000 shares at a price of 5.5 rupees. He wants to know the medium to long term outlook on this particular counter.
I think it is better to book profit. He's been lucky. That is all I can say, because the fundamentals doesn't even advise to recommend this stock. I think better to take money from the table.
Absolutely. Like Saurabh said, you were lucky enough, Samrat, to make profits. It's better to exit from JP Power Ventures right now. But Kunal, RK is asking about two stocks. One is GIC. I'm unsure if it's GIC RE, but his buy price for GIC is 159 rupees per share. RCF, the buy price is 113 rupees per share. He's saying both of these counters, he's suffering a loss from the buy price. What should be the future course of action for both of these counters?
So I think even if it's GIC Housing or GIC RE, both of these stocks have shown decent chart patterns, I would say. I would suggest to hold on to that stock. RCF, on the other hand, I think closer to 100 levels is where the stock seems to be finding a major support. But my only concern is the waiting period for RCF, because there is a possibility that these stocks, they generally tend to perform very well in a certain phase of the market. Right now is a phase where even though the stock has come back towards a good value zone or a technical support, but it may not bounce back as well as show a very major kind of an upward trend immediately. So that's the only concern with a stock like RCF. But other than that, I think GIC you can hold. RCF you may look to probably add also if the stock holds on to sub 100 levels.
Okay, moving on, and Kunal, once again coming to you. Subrata Mukherjee is looking for a medium-term outlook on Godrej Properties. What will be your advice on this counter?
See, it's been an underperforming stock, Godrej Properties, as compared to most of the real estate majors. But I think I would probably expect that at current levels of 1100 approximately, the worst could probably be behind the stock price. Not as if the stock may not correct from here on, but I think relatively from here, say in the next 6 months, 12 months, the probability of the stock going into a bounce as well as getting into a upward trend is far more higher as compared to the other peers. So I would suggest that if you're in from 1 year plus kind of a time horizon, then it's a good price where you can look to start buying.
Okay, this one is from Narayanan. He's writing to us from Chennai. He has 200 shares of Everest Canto at an average price of 162 rupees per share. He wants to know whether he should average at current price, book losses, or simply hold. Kunal?
I would suggest to hold on to the stock as of now, but then again, don't look out for holding the stock from a longer term kind of a time frame. I would suggest that maybe if the stock comes closer to 102, 105 mark, possibly in the next 3-4 months, then I think it's a good level where you will look to exit.
Okay, I have a couple of queries on the IT space, but firstly, let me take the query from Vinay. And Saurabh, he is holding 100 shares of Wipro at a price of 411 rupees. Needs a view on the IT space, and should he average at this point in time?
I think IT sector is surely likely to underperform this year because of the higher cost of money, and the business outlook is also getting grim. And the Wipro is least favored among the large cap IT. If you look at the operating margins and the kind of growth the company is witnessing, it is far weaker than the street expectation. And this is the stock which has beaten down quite heavily. So I expect this to continue because the outlook is still great. So my advice would be to better to exit.
To exit on Wipro, but Kunal, from the IT space, Hitesh wants to know what are the good entry levels for HCL Technologies or TCS for long term, and is it better to invest in both or just one?
So I think both could be better. TCS specifically, if the stock say comes back towards 3,100 mark, 3,050 is a major support, but I doubt whether the stock would probably come back towards that 3,050 mark. So you can keep a buffer of another 1%, 2% higher from those levels. So 3,100 approximately is where you can look to start buying TCS. And for HCL Tech, Similar support would be just around that 960, 980 levels. So maybe 1000 or odd levels is where you can look to start buying HCL Tech as well.
Okay, this one is from Dr. Rajiv. He's writing to us from Kerala. He wants a long-term view on Stylum Industries. He's already purchased some 200 shares at a price of 1,111 rupees per share. Saurabh, his time horizon is 3 years.
Sorry, not in coverage.
All right, Kunal, by any chance you've seen this, the charts for Stylum?
Well, extremely illiquid name, frankly, Cheryl. I think the daily volumes today itself is just 3,500 shares for Stylum. So I would recommend to exit these kind of stocks, irrespective of whether these stocks have shown extremely strong chart patterns or not.
Okay, moving on, and sort of once again an IT name. The query is from Bisakha, and she is holding 30 shares of Sonata Software at a price of 540 rupees. Is this a good time to book profits, or whether she should continue to hold on? Her investment horizon is for the next 3 to 5 years.
I think it is a very good time to book profits if you are having any in the IT sectors, especially in the mid cap stocks. Better to switch money in the financials, capital goods, or the hotel industries.
Okay, Saurabh, Word Wizard, do you track this one by any chance? Because Karthik wants to know about a long-term horizon of this particular counter, say for 5 years.
No, we haven't tracked.
Have you tracked the charts? I don't believe you tracked this
No, I
one. I
don't.
believe you had mentioned this last time as well. You don't track this one. So, okay, let me take the next query then. And this one is from Deepak. He's writing to us from Mumbai. He has Dixon Tech, 5,000 shares at a price of 125 rupees per share. Should he average it right now? Kunal, Dixon Tech, do you track this one?
5,000 shares at 125, you said.
Oh, sorry. 125 shares at 5,000 rupees per share. I stand corrected, sorry.
I guessed it. So, a tough one because the stock has already shared, I think, 50% from your cost price. It's at 2,800 approximately. Very difficult to give a call because at current levels, the stock seems to be getting into a very oversold kind of territory on the weekly, monthly charts. I would suggest that maybe wait out for another couple of quarters in case if the stock gets into a into a rally phase. Then there could be a strong case that this would probably be a major bottom which the stock has formed on the long-term time scale charts. So as of now, I would suggest a wait, but then just about for the next couple of quarters, if not more.
Okay, moving on, and the next question, Saurabh, is from Aditya, and he's seeing a fall in two counters specifically. One is GHCL and the other one is Indus Tower, and he wants to know the medium-term outlook on both these counters for the next 1 year, at least he can hold, and what will be your advice if he's at loss in both of these counters? Should he average out or hold on for the long term?
I think in the case of Indus Tower, I think the company made a huge amount of provisions because of the recoveries which the company failed to get from the companies like Vodafone, and the business is getting that is why I think the stock got hammered down very heavily. I think it is better to avoid. In case of GSL, I think it is a chemical company, and as of now the odds are not in favor. It looks always good on the valuation side, but I think it is better to avoid.
Okay, this next one is coming in from Swati. She wants to know about ABFRL. Kunal, she's suffering a 35% loss in this particular counter. Along with that, she has JK paper as well, where she's not mentioned the buy price. She wants to know whether she should sell, hold, or average, and not just Swati. Let me take another query I had on ABFRL from one of our other viewers as well, and this one is coming in from Vivek. He also wants to know about ABFRL. His buy price is 245 rupees per share. So if you can safely say both of them are not making profits on their holding when it comes to ABFRL, what's your view on ABFRL 1 and JK paper as well, if you could?
So ABFRL, I would suggest a hold. I understand that the stock is going through a very sharp corrective phase. It's corrected very sharply in the last 8-9 months. I think from second half of 2022, when the stock made a high of 340 odd levels. From there, it's corrected back towards 220. But then I think it's now coming closer to the ending phase of this major correction. There could be a very strong relief rally or a bounce, which I would ideally should take the stock higher back towards 250, 260 levels at least. That is a point where you may look to maybe reassess your holdings, as well as if the market situation improves, then you may probably look to shift from the stock to some other name. JK Paper, on the other hand, I would still believe that paper stocks have been doing exceptionally well on a long-term time scale. JK Paper is one of the most stronger names from the paper stocks. So I think if your portfolio is well made, well constructed, then I think you should probably also have a stock like JK Paper from the mid cap space, because it's one of the key sectors which has performed very well over the last many years, and I think has good foreseeable future over the next couple of years as well.
Kunal, just to add on to that, Deepak was also asking whether now is the right time to average out ABFRL.
Yeah, I think it's very close towards the bottom. As I said, I'm just waiting for a point where the indicators touch back into an oversold territory for ABFRL. So maybe another 5, 7, 10 rupees lower from current levels. So if you're not too much perturbed with these small gyrations on the downside, then I think it's a good level where you can look to start buying.
Okay, Saurabh, the next question is from Chandrasekharan, and he's sitting at a 35% loss on his investment in Quest Corp. He's holding 500 shares at a price of 740, but he can continue to hold on this counter for the next 2 years. What will be your advice? Should he average at current market levels or exit?
See, operational performance of the company is getting deteriorated quarter on quarter, and there is no guidance when this will improve. And moreover, the on the valuation side also, it is expensive considering the kind of degrowth the company is seeing. I think it is better to exit.
All right, on that note, let's slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries. Remember, viewers, we are not live on YouTube today, but you can write to us on our WhatsApp number. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let me continue taking all of your stock-related query, and this one is coming from a senior citizen. That's Mr. GK Dash, I believe. He's retired 2 years ago, Kunal. He's saying, okay, not Kunal, I'll take this to you, Saurabh, because he wants a long-term horizon view. So he has some shares of HUL where he's making a 2% profit on his total holding. He wants to know whether he should sell HUL right now and look to enter ITC at current market price for the longer term. We know the ITC has rallied, but do you think for the next 5 years a stronger bet than HUL to be put your money in, Saurabh?
It is a very good idea to considering to sell HUL and betting on the ITC. The point is, ITC is doing well on all the parameters, on the FMCG side, on the cigarette side, on the hotel side, and moreover, value unlocking is still left over there, in which the hotel business will be demerged, the other FMCG business will be demerged, and lot of huge value unlocking may happen, is likely to happen. So I think, in my sense, investing in ITC for a year or two will reap him higher returns than remain invested in the HUL.
Okay, moving on to the next query, and Kunal, coming to you for the next one. Dr. Manjunath wants an advice on Sun Pharma. He's holding 500 shares at a price of 1,020 rupees, and this particular counter has already shown relative outperformance. So going ahead, what's your view?
Yeah, I think it looks attractive. The stock, even though it's corrected back towards 959, 960 levels, where it's trading right now, but I think it's a good approach to buy Sun Pharma and every marginal dips. The corrections into these stocks are not very strong, not very deep, and I think that's where I believe that you can try and take advantage of. So from 1,010, 15 levels, the stock has come back towards the 5% kind of correction. Good zone where you may look to enter.
All right, this next query is coming from Shiva, and Shiva wants to know about LIC. He purchased this particular counter during the IPO, Saurabh. He wants to know whether it will perform in the next 2 to 3 years. So should he stay put with his holding or look to exit?
I think the whole of insurance sector is not expected to do well considering the valuation it has and the metrics which are going to change. I think in India, in the next 2-3 years, pure protection play would come into the picture, and these companies would find very difficult to sell the traditional plans. So I think the whole lot of bouquet for the like of HDFC Life or ICICI Pru Life or the LIC, these companies will become difficult for them to make money out of the traditional plans. So in my sense, I think it is better to exit.
Okay, better to exit. Kunal, the next question is on the big boy Reliance, and Praveen is holding 2280 call option for the March series at a price of 49 rupees 50 paisa. Can he hold or exit at this point in time?
Well, tough one, because actually Reliance has underperformed in this leg of the market as well as over the last 2-3 months. There have been very, very few days of the stock rallying up, and more days where the stock has actually gone to a correction. If I can suggest an alternative, I would suggest buy on Kotak Bank, or maybe a 1700 call option. If I'm not wrong, it's trading at some 19 rupees, 20 rupees approximately. So maybe buying 1700 call option for Kotak Bank for the current series could be a better play as compared to Reliance Industries.
Okay, this one's coming from Swastik and he's given three stocks that he's invested in: HDFC Bank at a price of 1,450, Bajaj Finance at 5,960, and Asian Paints at 2,900. He wants to know whether it's good time to add these counters right now. Kunal, either one of them.
Yeah, I think all three of them are attractive, specifically Asian Paints with the fall in crude oil prices. I think that should add towards the positivity in the trend. Bajaj Finance, the stock has been, no exception that the last 10, 15 years the stock has done exceptionally well. So I think at current levels of sub 6,000, again a very attractive zone. So if you're a long-term investor and I think you're looking to add on to quality stocks, you should go ahead with all three of them.
Okay, moving on and sort of coming to you, Sunil from Muscat is looking for fresh investment in SBI Life and HDFC Life. Do you like any of these counters from the life insurance space?
I think this is the space better to be avoided. In the recently presented budget, new tax system has come to the as a default, and the old tax system will be phased out in the next 2-3 years. So these come many of the investments come because of the ATC in the traditional plans that these companies used to sell, and I think in the next 2-3 years the market will become a pure protection play. And on the valuation sides also, these companies are richly valued if you compare globally in any of the emerging market or the developed market. So on the valuation side, on the business mechanics side, I think both are weak. It is better not to invest in this sector. This is a avoid sector.
With that, let's kickstart with the rapid fire then. And quickly, Kunal, Vidya from Singapore is asking about Siemens. A good time to buy or fresh at current market price?
Maybe not at current price, but I think at 30 to 50 could be a better price to buy Siemens.
Okay, Saurabh, Rajesh is holding 15 shares of Bajaj Finance from a price of 7,100. Is this a good time to average this particular counter?
I think better not to average.
All right, this one is coming in from a long-term investor, not mentioned the name, Devyani International, 400 shares at price of 160 rupees per share. Good time to average right now for a period of 3 years, Saurabh?
I think it is better to exit high on the valuation.
Okay, Kunal, Ramesh is holding 10 shares of HDFC AMC from a price of 2,400. Can he hold this counter for the next 3 years, say?
Not to hold for the next 3 years, but then I think a better exit point could be possibly in the next couple of months where the stock may get into a rally.
Kunal, Suresh from Hyderabad is holding 400 shares of IEX at a price of 203 rupees per share. Long-term investor, should he average or sell?
You should look to average and add.
Okay, Kunal, the next question is from Karthik. He's holding over 200 shares of Aurobindo Pharma from a price of 710. He's sitting at a loss. How do you see the stock going ahead?
Good time to average.
Kunal, one more for you. Kanan from Chennai is asking, is it right time to buy JK Tyres for a period of 1 year right now?
Yeah, I think it's a good time to buy the stock closer to 145 could be a good zone.
Okay, Saurabh, Ravi from Bangalore is holding 100 shares of Paytm from a price of 560 rupees. He's a long-term investor. Your advice?
The company has come to the profit step.
Okay, Kunal, Sanjay Jha from Patna wants to know about Greece Cotton, 250 shares at a price of 162 odd rupees per share. What should he do?
Not suggesting an add at current levels, just hold on to your existing quantity.
Kunal, Suresh is seeking your advice on BLS International. Is this the right time to enter in this particular counter?
A good time. The stock has been holding on to its support of 160, so good time to add.
All right, the next one is coming in from Dr. Ravi. I believe he has 100 shares of Paytm, 560 rupees per share. Long-term investor, what should he do, Saurabh?
I think better to hold.
Okay, so that's the advice coming in. But with this, viewers, it's time to wrap this edition of Rapid Fire as well as Buy Now, Sell Now on ET Now. Thank you so much, Saurabh, as well as Kunal, for joining us today live and helping all our viewers with their stock-related queries. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put this show together. But don't go anywhere as the market action continues right after this quick break, and markets are known to take the action ahead.